Howdy, everybody. Welcome, welcome to the Liberty Call. Today is Friday, August 16th, 2024. Hope you're having a fantastical day out there. Beautiful day here in Colorado. Not cloud in the sky. It is just gorgeous. So if you're in the area, come by. You can hang out here at my house. So anyways, hope you're having a great day out there. I've been away from the office, so if you've been trying to reach me, I apologize. Had doctor's appointments, went and did a bunch of errands while I was in town. So been away from the office for a bit. So anyways, I hope you're having a great day. And if it is your first time watching Liberty Call, if you could do me a favor, give me some thumbs up, a like, share, subscribe, follow, and press that notification bell. Again, markets were in a pretty decent mood. I see a pretty decent amount of green on the screen here, but let's go ahead and get into the markets for today and see how they turned out. Dow Jones was up 0.24%, 96 points, closed at 4659. S&P 500 up 0.2%, 11 points, closed at 5554. NASDAQ up 0.21%, closed at 17,631. The VIX down 2.82. It's at 1480 right now. Canada up 0.1%, Brazil down 0.17%, and Mexico down 1/3. In Europe, Germany was up 0.77, the UK down 0.43, France up 0.35, the Netherlands down 0.02, Spain up 0.59, Italy up 2.2%, big jump there, Switzerland up 0.29, and Portugal up 0.44. Russian exchanges both in the red today. The MOEX down 0.42, the RTSI down 0.55, and the Asian markets, the Nikkei in Japan was up 3.88%. Australia up 1.34%, New Zealand up 0.24%. In China, the Shanghai was up 0.07%, Shenzhen Component down 0.24%, China A50 up 0.53%, DJ Shanghai down 0.1%, Hang Seng up 1.88%, and the Taiwan weighted has not been open since we last spoke. All right, so those are the markets for today. All right, well, let's bring up the chart and let's look at the week and see how things turned out. All right, starting out with the Dow Jones. Looks like it's going to finish the week up about 3.23%. The S&P 500, 4.04%. NASDAQ, 5.39%. Dow Utilities, 0.74%. And the Dow Transports up about 2.37. So, the Dow was the lowest. Again, kind of true to form. The S&P 500 was in the middle, and the NASDAQ was the highest for the week. And it's been kind of the inverse in a lot of ways on the down weeks, where the NASDAQ is the worst. The S&P is kind of in the middle, like if we're thinking about our porridge with Goldilocks. And then, then the Dow would be the best performer, whether or not it's in the red or the green is neither here nor there. So there's been a lot of shift between rotation, between growth and value, and, people jumping back and forth. So we shall see how long that continues. So let me get that off the screen. All right, let's get to the economic data that came out this week, starting out with jobs. Initial jobless claims came in at 227,000, forecast 236, previous number 234. Continuing claims came in at 1.864 million, forecast 1.88, previous number was 1.871. Let's see, the producer price index year over year grew at 2.2%, below the 2.3% forecast and below the previous number of 2.7%. On a month-on-month, it grew by 0.1%. Forecast was 0.2% growth. Previous number was also 0.2%. The consumer price index grew at 2.9%. Forecast was 3%, and the previous number was 3%. So a little bit of better number there. The CPI month over month grew at 0.2%, right on forecast, and the previous number was a contraction of 0.1%. Retail sales year over year grew at 2.6%. Previous number was 2.04%. And on a month-on-month basis, it grew by 1%. Forecast was 0.4%. And last month's number was a contraction of 0.2%. Industrial production contracted at 0.18%. The previous number was 1.14% growth. And on a month-on-month number, it contracted by 0.6%. Forecast was a contraction of 0.3%. Last month's number was a positive 0.3%. Business inventories month over month grew at 0.3%, right on forecast. Previous number was a 0.5%. And housing starts contracted at 6.8%. Last month's number was a 1.1% growth. And housing permits contracted at 4%. And the previous number was 3.9% growth. And the last bit of data, the Michigan consumer sentiment came in at 67.8. So a little bit of a bump up from the previous number of 66.4. Forecast was 66.7. So a bit of a jump above the forecast. All right, so that is all the economic data that was fit to be told during the week. So good stuff there. Let's get to the market recap. U.S. stocks gain to remain on course for best week of 2024. U.S. stocks rose on Friday, capping off what is shaping up to be the best week of the year as easing fears about the economy prompted investors to buy the dip following recent market volatility. Positive economic data added to the market's optimism. The University of Michigan survey showed a rebound in consumer sentiment in August, marking the first improvement since the previous August. However, the survey also highlighted that lower income households remain affected by persistent inflation. No, really? I mean, groceries are only up like 100%. However, the survey also, we read that, inflation expectations for the next year and the 5 to 10 year outlook remain steady at 2.9% and 3% respectively, reinforcing the belief that the Federal Reserve's policies are having their intended effect, if you say so. As focus shifted to Fed Chair Jerome Powell's upcoming speech at Jackson Hole, expectations are growing that the Fed may begin a gradual easing of restricted monetary policy, with economists predicting a series of 25 basis point rate cuts rather than more aggressive moves. Again, if the economy is in such good shape and the numbers are, everyone seems to ignore the contraction in certain areas, but only seems to focus on the positives in the areas where there is still positive things to look at. If the economy is doing so great, why we got to cut rates? Seriously. Because they're not that high. I mean, it's just, these people who want easy credit, it's what put us in this position that we're in, and it's just, we're going to wind up back in the same spot. In corporate news, Ford stock dipped slightly after the National Highway Traffic Safety Administration announced a recall of 85,000 Explorer SUVs due to potential engine fire risks. Meanwhile, Texas Instruments saw a 1% decline despite signing a preliminary agreement with the U.S. Department of Commerce for $1.6 billion in funding under the CHIPS Act aimed at supporting semiconductor manufacturing. Great. So you and I, the taxpayer, are helping out Texas Instruments to build their facilities. Isn't that awesome? Applied Materials stock dropped 3% despite beating earnings expectations as concerns were raised about its reliance on mature node demand, which may be facing overheated spending. In contrast, Rocket Lab surged over 16% after successfully preparing 2 spacecraft for a mission to Mars. Marking a significant milestone for the company in space exploration. Overall, the market remains cautiously optimistic as well as investors await further guidance from the Federal Reserve and continue to navigate the mixed corporate landscape. Mars. Yeah, like people have ever been there. Okay. I grew up next to NASA, and I don't, at this point, because they work for the government, I don't believe anything that came out of, the moon and that BS. I could be wrong. I'm not saying that they didn't. I don't believe them anymore. So there's a difference. All right. Second article here from Zero Hedge titled Economic Growth Myth and Why Socialism is Rising. In his article, Lance Roberts of realinvestmentadvice.com discusses the apparent contradiction between the Federal Reserve's anticipation of rate cuts and the reported strong economic growth, just like I've talked about many times, as highlighted by recent GDP data. He argues that while the economy appears robust on the surface, the underlying issues, primarily driven by excessive debt and unsustainable economic practices, are far more concerning. Roberts points out that all the growth seen over the past decade has largely been pulled forward by the Federal Reserve through monetary interventions. I would 100% agree. Inflation is basically what has created all the growth that we've experienced. It's not really productivity that's caused it. These interventions designed to stabilize financial markets have created an artificial sense of prosperity without fostering genuine, long-lasting economic growth. Since the 2008 financial crisis, each dollar of economic growth has required nearly $6.7 of monetary stimulus, leading to massive debt overhang that cannot be sustained indefinitely. That's not a good return on investment. The shift from a productive-based economy to one dominated by services and finance, coupled with declining wages, has exacerbated the issue. As a result, Americans have increasingly turned to credit to maintain their standard of living, creating a fragile economy dependent on debt. Robert also highlights the growing wealth inequality and rising calls for socialism as a response to the struggles of the middle class. I've not heard any middle class people talk or demand socialism. It's usually the poor and the very wealthy, and because the wealthy do it because they can have a controlled economy where they're the one person who's selling you widgets and they're just getting rich. That's why oligarchs and the like having a centralized economy, because they only have to sell to one person. The people in government, you bribe them, and then you make oodles of cash. Versus the open market where you got lots of choices for your widgets, and you may go to you may choose high end widgets because you like high end stuff, or the other person might go with the bottom basement dollar store widgets, and just because that's all they want or need. Anyways. However, he cautions that socialism, which involves redistributing wealth through government intervention, is not a solution. Instead, he suggests that addressing the debt imbalances and returning to a more sustainable economic model focused on productive investment and savings is essential. Well, unfortunately, the problem that we're going to have to do is we're probably going to have to break up the republic. And in the states that want to be productive and have free economies, you're going to have to deport the leftists who are so focused on socialism and handouts and all that stuff. So, sorry, it's just the way it is. I hope, I feel bad for people who, have those leftist views, but you got to go out. In conclusion, Roberts warns that while the economy may continue to experience short-term growth spurts, the long-term outlook is constrained by burdens of excessive debt and the failure of monetary policy to generate real or organic growth. More government intervention, particularly in the form of socialism, is unlikely to solve these deep-seated issues. So, if you really wanted to do it right, what you could do is have, say, 30 or 35 of the more normal states just leave the union. Stick California, New York, and New England with all the debt that they've accumulated in the federal government. And say, hey, this is your problem now. We're our own country, or we're our own independent, republics, and we'll decide if how we're going to coalesce later on. But that's your problem. Bye bye. And I'd start using a gold-based currency or crypto or something like that. So, anyways, that's everything that I had there. And last but not least, from Mises Wire, what has the Fed done to our lives? This was written by George Ford Smith. So let's see what George has to say. In his article, George Ford Smith argues that central banking, particularly the Federal Reserve, plays a crucial role in enabling and perpetuating war through its ability to create money out of nothing, a process he equates with counterfeiting. Smith highlights how this monetary inflation allows governments to fund wars without intermediate taxpayer backlash, as the costs are hidden in the devaluation of the currency. Smith draws on historical examples, particularly the creation of the Federal Reserve in 1913. It illustrates how central banking has facilitated the U.S. involvement in wars, starting with World War I. He describes how the Fed's ability to lower reserve requirements and inflate the money supply enabled massive financial support for the Allies and ultimately led to U.S. entry into the war. The war was done despite initial public opposition, with the help of government propaganda and the suppression of dissent through laws like the Espionage Act. And actually, Wilson threw a lot of people in jail that complained in the press. And illegally, you're allowed to complain if you don't think your country should be fighting wars. And like a typical Democrat, he didn't like what you said. He threw you in jail. Kind of like what's been happening after J6. A bunch of people trespassed through the Capitol building. Hey, straight to jail for you. But you burn down blue cities. Nothing. It's peaceful. No big deal. All right. The author critiques the concept of fiat money, currency not backed by a physical commodity like gold or silver, as fundamentally fraudulent. He cites Thomas Paine's 1786 warning against legal tender laws, which force people to accept this counterfeit money. Smith argues that fiat currency, by its very nature, allows governments to overextend their military and economic power, leading to perpetual war, economic instability, and the erosion of individual freedoms. Smith concludes by calling for the abolition of the central bank. I call for the abolition of the federal government and fiat money, asserting that true peace and prosperity can only be achieved by returning to a system of sound money, free from government manipulation. He warns that as long as the central banks like the Fed exist, war and economic ruin will continue to be the norm. And yeah, I heard a statistic the other day. I think there's like 23 million people who work for governments. I mean, it's more than 5%. I mean, that's probably more than 10% of the workforce. Because there's 330 million Americans. You got to figure maybe at best 2/3 of those are working age. Maybe closer to half. And, so of that, so it's about 180 million. Yeah, I mean, that's more than 10% of people collect a government check, meaning that they are a strain on their neighbor and they are a burden to either their county, their city, their state, or especially if you're the federal government. And those people vote in those elections, which I have a real problem with, because the cashier at Walmart doesn't get a say in the boardroom at the CEO's office. So I mean, their complaints are valid, but you don't get to make decisions about how things are run if you don't have equity or ownership in the company. So it just. And with the federal or with the government, the owners are the taxpayers and you are the employee. And that's where, people have this real distorted view of government employment, that they've done something important with their lives, which mostly you've basically just been a burden. All right. Well, that's everything that I had for today. Now I've been on my soapbox bitching about government spending. So hope everyone has a great weekend. And if anyone needs to reach me, go to DSAFinancialGroup.com. All my contact information's there. So if you need to get your financial crap together, give me a buzz. I'd be happy to help. All right. Well, hope everyone has a fantastic weekend out there, and I shall talk to all y'all again next time. Adios.